Hello and welcome to Trade Talks. The third quarter of the year was marked by a confluence of events that by themselves would have been enough to shake things up in the world of global markets. The Fed's decision to cut rates for the first time in over a decade, the designation of China as a currency manipulator, the yield curve inversion that took place for the first time in over 10 years, the escalation of the US-China trade war, oil price volatility caused by geopolitical tensions on the Arabian Peninsula, and the lingering Brexit drama. Now, this interesting third quarter wraps up in the week ahead with stocks just slightly higher for the period after a summer of zigzag moves. The market faces some of the same challenges in the final quarter of the year, including Brexit, the trade war with China, sluggishness in the global economy, and the impeachment inquiry into President Donald Trump. By mid-quarter, the US presidential election will be just a year away, and it could become a factor that could start to trigger market volatility. Now, last week, US equities markets reversed early gains and sank after reports that the White House is now considering limits to US investments in China. Stocks with exposure to China, including Boeing and Apple, fell following the news of the administration's considerations, which, if pursued, could endanger billions of dollars in investments tied to major indexes and escalate the trade war. Chinese stocks trading on US exchanges dropped on fears that they could be delisted, with shares of Alibaba losing 5%. The Dow fell 0.3% to 26,820. The S&P 500 slid 0.5% to close at 2,961. The Nasdaq Composite dropped at 1.1% to 7,939. The S&P 500 ended the week down 1%, the second straight weekly decline. Up next for the week, the Q3 reporting season has started already with results from 15 S&P 500 members out, but will really get underway when the big banks reports results in the mid-October. Up next for the week, the Q3 reporting season has started already with results from 15 S&P 500 members out, but will really get underway when the big banks report results in mid-October. It is premature to draw any firm conclusions from the results that have come out already, but we are off to a weak start, particularly on the revenues front. Not only is revenue growth for the 15 index members tracking below what we had seen for the same group in other recent periods, but the proportion of these companies beating revenue estimates is also comparing unfavorably. So my advice to the investors, be ready for another bumpy quarter and please manage your risk by diversifying your portfolio. Keep a close watch on the economic data and always be alert and informed. Thank you so much for watching this video. To keep yourself updated about the latest happenings in the world of financial markets, subscribe to this channel. To register for our seminars in the month of October, click on www.century.ae. My name is Yogesh and you have a great week ahead.